Musings podcast with Fairbairn and Russell. Hello and welcome to the Market Musings podcast, where today our guest is the CEO and founder of the Aquis exchange, and that is Alasdair Haynes. Alasdair, how are you? Welcome to the Market Musings podcast.
Great. Thank you very much indeed for asking me. I'm really looking forward to it.
Good. It's good to be talking to you in a more candid environment that we do on this podcast. And of course, we have, I'm outnumbered today. I believe there's two Scotsmen in the room.
Yep. It's very unusual, so it is, to have two Scotsmen in the room. But no, you're very welcome on the podcast, Alasdair. And it's nice. It's nice to gang up in the English. So it is, especially after last night's result. They're very buoyant, and I've had a few strange messages in WhatsApp, etc. this morning. So yeah, I'm lying low. So but no, you're most welcome on the podcast. And I'm pretty excited about hearing your story. Because you've certainly had an interesting career.
Well, I'm certainly looking forward to talking to you about it.
Yep. Where is it you're calling from today? It's not Scotland, obviously. Today.
No, it's as close as Scotland, the Old Alliance. I'm sitting in France at the moment, just by the Loire. So, of course, over here, the most important thing always to say is you're Scottish. That goes down incredibly well, particularly in rural France.
All right, excellent. Good stuff. Mark, and you're back in Holland, aren't you? After your week, Mark was actually up in Scotland a couple of weeks ago, so he was.
Yeah, I was. I made a visit over to see the team after 18 plus months of solitary confinement and not seeing anyone. But yeah, it was nice to bob over to Bonnie, Scotland again. It's a nice part of the world. But back in The Hague now. But I believe, Kenny, you've got some good weather this week, and in The Hague we've got some pretty miserable weather.
Yeah, it's been standout weather the last couple of days here, so long may it continue. It's unusual for Scotland, but we'll take it because sure as hell it'll be pouring the rain sooner rather than later. But that's the way I like it. Yeah, I just I don't do the heat well, but yeah, no. So what we do in these podcasts, Alasdair, is we like to get more about the directors and the people behind the companies. We're a great believer that people make companies, and you can have the best assets or the best projects in the world, but if you don't have the right team and people behind that, then the projects are going nowhere. So really, it's a potted history of Alasdair. So as what you've done in the past, what your education was, what your first job was, what your corporate career was, perhaps, far back as your childhood, ways you've got, anything, what more. The list is really endless. It's yours, probably for the next 10 or 15 minutes to tell us a bit about yourself.
Look, I think my background is very different to what I would say the standard entrepreneur's background is. This is not a rags to riches story. I come almost the other way around, from a riches to rags story. I had a very privileged background. I come from a very long Scottish family. Alcohol has played a large part in that family. My great-grandfather was the founder of what today is now Scottish and Newcastle breweries. In fact, he was a Duker, and he and his three brothers set that up. And Duker's beer is still an ale that you can get in most Scottish pubs. Needless to say, like many things in many sort of big families, that they had all sorts of issues and tax problems in the past, with inheritance taxes and stuff. And when it came down to my generation, I more or less inherited lots of lovely furniture, some lovely paintings and sort of histories of Scotland, and absolutely no money. And, for me, it was always a driving force going to school. I left school, again, in a non-traditional. I went to a private school. I thoroughly enjoyed it, but I left at age 16 when I did my A-levels. And really wanted to get into the city, and actually in those days wanted to make money. Actually, there's nothing further from the truth now. I don't think entrepreneurs should set out to make money. That's not what I think successful entrepreneurs do. I think it's much more about, they want to change the world and they want to change the way things happen. But in the early days, I'd seen family fortunes sort of fall, and I just wanted to be able to get back and be sort of remembered within the family as somebody who put the cash back onto the table. And that's why I went into the city. I started age 16. and started at Morgan Grenfell. I think my first job was in Barclays Bank, and it lasted about a year, and then I moved into Morgan Grenfell, and I went into the back office, which I think is one of the greatest things in a bank, because all the glory seems to go to the front office, but actually the truth is banks and businesses survive on how they operate. And if you can learn how they operate at an early age, you're just in a much better position in the future to be able to understand how a business works. So I worked in the back office, and I used to sort of actually ask people to sign checks and go around the bank and find out. In those days, Morgan Grenfell was 50, 60 staff. I mean, it was really small as one of the merchant banks in London. And then I went off and I was fascinated by the foreign exchange department, when all the foreign exchange dealers were sort of throwing millions of pounds. And, as a young person, it was, I was just sort of fascinated by what they were doing. And I remembered very, very well asking, I'd quite like to say the conversation was, well, do you know what, Alasdair, so private school people here, it's sort of not their game. It's not sort of what happens here. That's more the go off to corporate finance and learn the trade there. And then I promptly, absolutely true story, got out my wallet and showed them about 5 or 6 betting cards and said, there's 2 things I can do. One is I always love statistics, and I sort of really like horse racing and horses and having bets on sports and things like that. And the second thing to do is, I've seen you guys go to the pub quite a bit. Probably sort of can drink a bit, and it's in the family. And hand on heart, true story, they took me off to what was called a Jamaican Inn, or better known in the city as the Jam Pot. And said, well, if you want to actually go and be a Forex trader, we'll take you out for an interview. And my interview was there, and it was to drink a bottle of white port. And to this day, I've never, ever drunk white port ever again. But it was, I managed to survive. My task was to get back to the office without embarrassing myself completely, and go back and be able to stand up and at least have a sort of conversation. And I passed that. And within the following week, I was a foreign exchange trader.
Wow.
And that was my introduction. When people sort of say, how did you get into the trading world? And the answer is probably the family connection, the ability to drink, and the understanding of how to gamble and what statistics and odds were. Of course, today, if we're hiring people in this space, you sort of need a PhD in some form of physics. It's an engineering game. It's a totally different game there. And of course, the irony of it is the Aquis offices today, when we establish this business, it actually overlooks the Jamaica Inn, the Jam Pot. And so I feel that I'm going to start my city career and finish my city career almost in exactly the same place.
Yeah, I must admit, port's my downfall as well. My problem with port is I usually consume it after 10 pints of lager. It's usually the thing that finishes me off. And it's too easy to drink. It's like diluting juice. It's like kids diluting juice. You just drink it and the whole bottle's gone in like 10 minutes. And it's only when you stand up then you realise how...
And that's the great problem. I love port today and I love wine. It's why I have a house in France. I mean, it's a fantastic quality of life here. And I'm sure, when I eventually retire, I may well retire to France. I think, again, the quality, the food, the wine, it means a great deal. And, people live their lives that way. It's sort of high quality stuff. But I say I don't think I'll ever drink white port. It was quite enough of an experience.
Yeah, that's such a stereotypical old-fashioned way of doing a job interview in city banking.
Well, I think you'd probably get fined for that sort of thing now. It's very, very politically incorrect.
Yes.
Maybe I wouldn't be allowed into the city today if I was trying to get in. And I certainly, when I look at my own children and I talk to other people's children, I do not advise them as the method that I got into the city is the way to get there.
No. Okay. So that got you into Forex trading. How did the story continue on from there?
Well, I love Forex. They sent me off in a sort of mad way to teach out in Singapore. We had an office out there. So I was sent age 24 to go and teach the locals foreign exchange. Which was great fun because I learned in the early days why the office wasn't succeeding particularly well in its trading capability. And part of that was that, I don't know if this is true or not, but I was told when I was there that in Chinese, there is this, and certainly this part is true, which is a loss of face. Saying no is not something that is in the Chinese culture. And actually, I don't believe in the Chinese language there is a word for no. Well, in foreign exchange, I certainly don't demean the people who enter it, but there are only two words you need to know. One is yes and one is no. And if no isn't part of the vocabulary, that makes it pretty difficult. And a broker's paradise, if you're talking to somebody and do you want to buy these dollars, do you want to buy these Deutschmarks, or do you want to buy these yen or whatever, and the only answer is yes, then obviously you're not going to be in a great position. So there I was as a 24-year-old sent out to teach people how to say no and teach people in effect how to trade. And I loved it. There was no better experience than being an expatriate when you're 24, learning how to, learning what everybody learns afterwards, that travel and living in another country is experience and one of the greatest educations you can ever have. And I left school. I said I left very young. I did my A-levels when I was 16. So, going off to university, I felt was not something that I particularly wanted to do. Again, I think very, very different today. And I really love academia and really think and promote that is what people need to do. But for myself, age 16, it was too young to go to university, certainly in those days. So here I was as a non-graduate person sitting in a very graduate-orientated culture, which Singapore was in those days, teaching people foreign exchange. And I came back, I got a phone call actually from my boss and said, and I know in those days it was 1984, saying, well, actually, we're going to open this thing or get involved in this thing called the futures market. Actually, we think that as you do a bit of trading, I think you need to come back to London. So I did. And that was my introduction into futures trading. So they gave me a green and white striped jacket and told me how the hand signals worked. I learned a bit of the trade off some of the Americans and Chicago sort of people who'd come over here, and was thrown into the pits, which in those days were very, very quiet, very early stage. And my God, if I knew what I knew, a lot of money, but of course we were all incredibly naive in those days. But it was a great experience again. One which, as a young person being in a trading pit, it's something that's very hard to explain to people today. Only those in the sort of gold ring today and really understand that sort of feeling of being with your colleagues, your peer group, your enemies and friends, all in the same place in a very, very, very tight, certainly non-COVID and social distancing environment. But it was fun, and again, you learn pretty quickly about mental arithmetic, people behavior, and how to be able to get on and judge people. And again, that was a very good experience to learn, for when you're later going on to trade in those early days. So I spent a number of time in the futures pit. That obviously came off the floor when it went all electronic. And that's how I started my life in electronic trading. And it was then during the derivatives where obviously you do need to understand about technology. You have to use technology. In the early days of Black and Scholes models or Fisher-Black models or Cox-Ross-Rubenstein and all these different modeling that went on, it was very, very early computers. And those who understood more about computing actually had a tremendous advantage. And hence why I got myself involved in the early stages of technology. Worked for Bankers Trust, ran derivatives, global derivatives, equity derivatives for HSBC, and then did a fatal mistake, left HSBC. They and I sort of fell out with each other. At that point, I worked out I wasn't really a large company individual. I find that, I like to, I'm not terribly good at sort of meetings and things with where, your meetings to discuss meetings, all the sort of various politics that goes on. And I set up on my own, which was an unmitigated disaster. I also found out very quickly that I wasn't good at big companies, but I actually wasn't very good on my own either. And I set up a trading business on my own, and I went bust. I had to sell. I had a house in France at the time, and I had to sell the house. And it was a pretty low point in my life. And I think at that point in time, you soon learn on failure the standard story, which is either you stay down there and never recover, or you fight back and realize that, just because you've lost your money and just because, you suddenly learn who your friends are, those people you expect to stick around you don't, and those people who you don't expect to stick around, you do. You find out who your true friends are and you fight back. And that's how I started. I phoned up somebody who was involved in a company called ITG in Australia. And I said, look, I don't know what I'm going to do, but have you got any ideas? And he said, well, actually, there's this electronic company called ITG. I'm working for it in Australia, and I think they need something in Europe. And really, the rest of the story is simple. I set up ITG in Europe. It went from strength to strength. We introduced crossing. Today, they call it the dark pool, but I suppose some people could say I was the father of crossing back in 1996 when we set the company up then. It certainly didn't have the same sort of reputation or double volume caps and trading prohibition in many ways that it does today. In fact, people used to laugh at me and say, it's an American phenomena, never come over here. Why would anybody want to do midpoint crossing? And then, of course, years later, we have the regulators capping the amount of business because it's grown so much. So again, one of my mottos is better to be born lucky than clever. And I think I've been very fortunate. I've been in the right place at the right time. I was at ITG. We grew the business. I moved on from ITG and was very fortunate to go to Chi-X. Chi-X, we sold. It became the largest electronic trading platform for equities in Europe with 21% of all equity trading. And then decided that I wasn't finished, and there's a lot of unfinished business. And when we sold that company, I started Aquis, and Aquis has just been a journey of two halves. We set the company up. We are the first subscription-based exchange in the world. I had this enormous belief. I'm a complete subscription junkie. I was absolutely true story, but this idea isn't mine at all. It's my son, who ironically now works for Aquis in our technology group, in the infrastructure group. But age 12, I was buying him his phone, first ever phone. Anybody who's listening to this podcast will know that the only thing that a 12-year-old, or nowadays probably 11 or 9, 10-year-old, wants is a mobile phone. He wanted the all singing, all dancing, latest iPhone with unlimited calls, unlimited texts, unlimited downloads. And I remember it very well going into Vodafone at Tunbridge Wells and him asking that. And I looked around and went, do you know what? I think you're probably going to be downloading age 12 stuff that your mother isn't going to want you to see. And you're probably going to be talking to your mates all day and not actually doing much homework. So I bought a very grumpy 12-year-old, a £12.99 Samsung phone, and he didn't get his iPhone. But that was the birth, because what I realized, the birth of Aquis, was that what Vodafone was doing was managing message traffic. It's a utility business. And what a stock exchange is, it manages message traffic, and it's a utility business. And the big difference is the business model. And the business model is subscriptions. And if you go up and read any academic papers on subscription, it just changes human behavior. And it's fantastic what they do. If you look at the Fortune 500, some of the fastest growing companies over the last 10, 15 years have been based on subscriptions. Anybody listening today, there won't be one person, I don't think today, who doesn't pay a subscription in some form of their daily life. They will watch television through Sky. They'll watch movies through Netflix. They'll listen to music on Spotify. They'll shop through Amazon Prime. And you can just keep on going. And every single time you look at what happens when a subscription is introduced, and maybe this is my Scottish ancestry, the marginal cost of zero is so attractive and so appealing. So I felt, why can't this be done in the stock exchange world, where we have complained for years about lack of liquidity? And if we can get people based on a subscription model, and we can actually get that marginal cost of zero, then we can increase turnover. This has never been a story about taking market share from one place to another. This is a story about how we can grow the amount of liquidity, which is the lifeblood of an exchange. And actually, it's the lifeblood of equity trading. And that's what we did. And it was pretty difficult to start with. Michael Lewis wrote the book Flash Boys. Great book. If anybody hasn't read it, do. It reads like fiction, but the scary thing about it is fact. And the vast majority of that book, I know these characters, is true. And so we went out there and built a business which was about electronic trading, but at a time when Michael Lewis had sort of demonized electronic trading. I think that part he got wrong. But it really was difficult to get this thing going. And it took a number of years. And today, a number of years later, when we managed to persuade and show people the benefit of the model, we are the largest exchange in Europe in the provision of liquidity. We actually provide 23% of the liquidity of the best prices and best bids and offers, and that's in depth and size, bigger than I think any other exchange in Europe today. We execute just around 6% of all European equity trading, and that makes us the 7th largest exchange in Europe, which is pretty amazing when we started this from scratch. And today, most people still haven't heard of Aquis. But we're growing, and I think we will continue to grow. My ambition is to make this one of the leading global exchange services group. And I have every intention of doing that.
But I wonder, you talk about the subscription, but can you elaborate on that a little bit more, Alice, as to the subscription-based model for the exchange?
Yeah, we charge people by message traffic. And that literally means, rather like a mobile phone company, what we do is, we will charge for a message. Now, a message can be an order. It could be a correction of that order. It could be a cancellation of that order. But if you're using the network, we charge you. Now, what we do say is that if you use the network or the exchange to supply liquidity, that message is free. So if you think about it as stall holders in a market fete or a village fair or something, what we say to people is, the stall holders here, if you come to the stall, it's free. You can supply all your goods for people to buy and sell. But every single person who comes to that market buys something in that market. It's a message. And they might change their mind, might correct it, and we charge them another message. So each day it starts off at £2,000 a month, and we give you 1,000 messages a day. And it goes right the way up to £80,000 a month, where you can get more than 50,000 messages a day, and you get unlimited message traffic. And we started that. And I think a good way of describing that, because a friend came to me who was an asset manager of a huge asset, I won't mention the name, but a huge asset manager, one of the world's biggest, and based in Europe. And they described the model, said, look, I need to understand it. And when I was trying to describe it to him, and he said, well, just look, is this right? Banks today pay £50,000 a month to you for unlimited trading. And I said, yeah, one day that's exactly what will happen. And they can trade in 16 different markets across Europe, or 17 different markets now across Europe. And they get unlimited trading. And he said, well, if I give all my business, I'm not going to do this, but in theory, if I give all my business to one bank, are you telling me that for £50,000 a month, so £600,000 a year, you get all the trading, all the connectivity, and all your data? So, yep, that's absolutely right. And he said, well, I don't think I'd be 10% of that bank's trading, because I'm big, but I'm not that big. That's huge when you look at the investment banks. And they said, well, if it's 600,000 a year and I get to 10% of it, are you telling me it's £60,000 is the cost of this? I said, yep, that's absolutely right. But he said, I'm writing a check today for 10 million. Yep, that's the Spotify effect. That's why you get $10 million worth of songs for $10 a month. If you use the subscription, the power of the transparency and the power of the model is you can get a huge amount. Now, I said, look, we're not criticizing the banks. The banks have costs they have. But what we do is we force a transparency into the marketplace. You now know exactly what the cost is of everybody doing the business here. And you now need to ask, what am I getting for the 9.94 million? It might be clearing, it might be research, it might be, it could be all sorts of smart order routing, it's all sorts of things. But what this model does is it brings a transparency and it changes human behavior. And we know that. And one of the great examples of human behavioral change is if you look at Amazon Prime. In America, the average Amazon Prime user spends $1,000 a year. But the non-Prime user for Amazon spends roughly $550 to $600 a year. So you can see, just as an example, the behavioral change that takes place to motivate people to transact and do business. And that's exactly what we're trying to do here. Because without a doubt, in a post-Brexit, in a post-COVID environment, there's never been a more important time to have liquid equity markets and to go back to what the purpose of a stock exchange is, which is to supply capital through the marketplace to companies so they can grow. And I think that is why, again, I said it's better to be born lucky than clever, but we're in the right place at the right time, because we've now entered the primary markets. And because we've entered the primary markets, I think this is a phenomenal opportunity to get the many, many thousands of great SMEs that sit in the UK and in the rest of Europe to actually look to the public markets to raise money. Very different to how startups and other businesses have looked at the markets in the past.
Okay.
I think most of our listeners, Alasdair, will be more familiar, obviously. I mean, you've got three divisions within the business, but the one that I'm familiar with as well is obviously the Aquis Stock Exchange, AQSE in the UK. Probably for the benefit of our listeners, could you give us a brief history of that exchange? Because it's had 2 or 3 iterations in it, and then we can talk about it in a bit more detail.
Yeah, I mean, it's had a history in the past, like many sort of businesses. It was originally OFX, then it became Plus Markets, and then it was ISDX, and then it was Next Exchange, and we took it on. And a lot of friends came to me and said, look, 5th time lucky Alasdair is not a great sale. Why are you doing this? And I think I can tell that I've got a pretty clear vision here. And I think as a group, we have a pretty clear vision of what we want to do. I think the best way to show this is to say that companies are very much like children. They start small, they grow, and they mature. And if you look at how we treat our children, we start them off in a primary school. And at primary school, you're basically learning how to learn. And you have certain behaviors. We'd expect 4 and 5-year-olds to behave in a certain way. And they're taught in a way that is proportionate and appropriate for their skills and behaviors at that time. And then we move them on to a secondary school when they're growing up a bit and learnt a bit more. And that's preparing them for really adulthood. We give them a protected environment, but we actually teach them in a different way. We give them homework. We give them all sorts of additional things that they don't get at a primary school, and their behaviors are expected to change. And ultimately, we send them off to university. Now, not in my case, but actually that is the norm today. And at university, guess what? We teach them in a different way. We expect different behaviors as a result. Now, what is so different when we look at companies is a company that goes public today tends to have a one-size-fits-all regulation, that we don't have the proportionality, we don't have the appropriateness of mechanism, and we know very well that companies that are 3 to 5 million market cap, they trade differently, they act differently to companies that are, say, 200 million market cap, which again trade differently and act differently to those that are 3 or 5 billion. So as a result, what we've decided to do at Aquis is to bring proportionality of regulation and appropriateness of trading mechanism to the whole, what we would say, the school of stock exchanges. So we've created a marketplace called Access, which is for early stage. It's primary school. It's learning how to be public. It has a different set of rules, a different set of behaviors, companies to learn going public and the benefits of it. We then move them onto the Apex market, or you can come directly into the Apex market. And there you have a higher, so not a higher standard, but it's a different mechanism of teaching. In other words, there we ask people to use a growth prospectus to join rather than an admissions document. And what that means is the growth prospectus is a higher standard, but it also allows retail and institutional investors and family offices and qualified investors to invest in a company. Now, it's really important that as you grow as a company, you get more and more retail involved. And you'll hear me say so many times on platforms, we have to get the public back into public markets because the public have capital and they should be allowed to invest alongside institutions. And they play an incredibly important part because taking a company public isn't just about raising capital for an IPO. It is also about the secondary trading and the liquidity that is required post-IPO. So what we've done here is that we have a prospectus called the Growth Prospectus, templated. It's shorter, it's easier than a full prospectus. It still has to go through the UK Listings Authority approval, that's the FCA. But the time frame is much, much quicker. The cost for legal fees and accounting fees, much, much quicker. And yet you can still get and maintain the higher standards. For liquidity, we've done a deal. We've gone back to the old days of stock exchanges. We've offered warrants up to 19.9% of the Aquis Stock Exchange. That is a subsidiary of the public company, the Aquis Exchange PLC. But the stock exchange business, 6 market makers, and actually very soon to be 9 market makers, but 6 have signed up to a deal. And in return for supplying liquidity, maximizing the spread and being a capital provider for those stocks for the retail market. And we say that those stocks, they cannot make prices wider than 5%. Guess what? You get 6 competing market makers providing capital. January, when we started this, we've seen spreads decline, and we've seen turnover increase by more than 800%. Now, these are very significant numbers. It's about creating liquidity in the secondary trading. We also, in this segment, in the Apex segment, protect, just as I said in schools, you have to protect your students while they're growing. So what do? We've actually banned short selling, except for those who are designated market makers. We believe that in less liquid companies in that stage of growth, they shouldn't have companies coming in and selling short. It should be the shareholder who decides when they want to sell the stock and not a third party. So we're here to protect those companies until they grow and they leave the Apex market, possibly around the 700-800 million market cap, and then they will go into our university, which is the main market. And that is really important, that we're giving them things. So when people say, why would they come to Aquis and not go to AIM or Standard Market? Well, just like AIM, we're a growth market. We get all the privileges, the same privileges they do, which are stamp duty, no stamp duty on the trading, inheritance tax relief, VCT, EIS relief, all these sort of things, which you need for early stage companies. Yeah. But on top of that, we give them access to the retail market at the early stage, right at the IPO. We give them protection from short selling. We give them market maker benefits by having 6 market makers trading in their stock. And we also have abolished the nomad structure. We have to have an advisor, but what happens is we can deal directly with the companies. We think that that relationship is really, really important, that the company, the advisor, and the broker should all have strong relationships with the exchange. And actually, that's what I believe a modern day stock exchange should be. And you've got to remember what's going on here is there's and I never liked the word paradigm shift. I think it's far too sort of management consulty type speak, but I think there is a shift taking place. And you look at it, I look at my children who are 19 and 22, and you look at this and go, they're friends. You look at what's going on. It's all about digitalization. 3 billion people in the world today communicate digitally, game digitally, they shop digitally. And you know what? It's starting to prove they will invest digitally. Not necessarily in digital assets, but in new economy businesses, e-commerce businesses, ESG businesses. And I think rather like NASDAQ became the stock exchange for tech companies in the 1990s, Aquis Stock Exchange is intending to be the home for growth companies and the stock exchange for the new economy. And I think with this shift of digitalization, we need to be prepared as an exchange to be ready for this capital that can be provided from the retail, as well as institutional, as well as family offices, as well as qualified investors. And it's that digital approach that we're setting ourselves to be.
Yeah, I must admit, my portfolio at the moment, I've probably never held so many Aquis shares in my life. It's actually, I'd probably say it's a 50-50 split, which I actually sit back and think about it. I'm saying that's quite a lot, but there's actually a great selection of companies out there. There's a lot of gems that are just hidden out there because I think there's still, because of the historical, as you say, this is the 5th sort of iteration of the exchange. There's still a lot of people that are I'm not saying scared, but they're just wary of what's coming down the pipeline. But I must admit, in my experience in the last sort of 6 months, there's been some fantastic opportunities, and the sectors that are covered as well is increasing. And I think I remember you done an interview with Mark 3 or 4 months ago, and I mean, there's a huge pipeline of IPOs coming down as well, isn't there?
We've got 51 lined up for the next year. We've done 12. Actually, we did one today. It's 13 this year so far. We've raised pretty close to 100 million for these companies. So people who turn around and say institutions won't invest on on Aquis. It's just untrue. People who say retail or qualified investors won't invest, that's not true either. People say, well, I can't connect. Well, that's partially true, but AJ Bell, Jarvis, Barclays, all these people are now connected to us, have done that over the last few months. We're working very closely with interactive investors. It's a bit slower with Hargreaves Lansdowne, but these guys will come. They have to come because we've got so many good companies that are real growth businesses that are, many of them are really good, potentials for investors. Now, I'm not here to recommend a particular company, but many of our companies have performed incredibly well. We absolutely can never guarantee that every company is going to perform well, but what I will guarantee and absolutely put ourselves on the line is it is about transparency, innovation, using technology. Those are the three pillars that Aquis has. So we want to give people a fair and equal opportunity. We will not let companies hide and not disclose financials. You can go to another exchange if we're going to be at that level. You're not coming to Aquis. And I can actually tell you we've turned 8 companies down because we didn't feel they met the criteria that were necessary for us to be able to say that they would be the right sort of business to come onto our market.
No, it's definitely an interesting shift. So it is. I mean, obviously, I'm pretty active in some of the bulletin boards and Twitter rooms and Telegram groups, and there's definitely a lot more interest. So there is, but people are still lazy. I mean, I know a lot of these brokers are now dealing in Aquis, but you've still got to pick up the phone. But that will change. That will change, and it's a bit like people turning around. During the Industrial Revolution, there were so many people who still believed that they wanted to, go after blacksmiths and things like that. The world has changed. The world is changing, and it's so important that we as exchanges can actually adapt to that change. If you are still taking orders over the phone and charging 10 times the amount, are you really going to stay in business that long? Yeah. Not when the growth and the change is taking place. So I'm not saying that these people will change. That they're not stupid. They're very smart people, and maybe their prioritization, in my view, is not necessarily right. But they will change. They have to.
Yeah. And what about then, like getting a vision on the quotes, the prices from companies on Aquis? Is it as easy? I'm just thinking of popular platforms like LSE or ADVFN, where you can get obviously the quote for the London Stock Exchange. But I sometimes find that perhaps you can't get the quote for an Aquis listed company. You might have to go either to Google Finance, which we know is not ideal, or direct to the website. Is there anything that you can sort of say on that front?
Yes, I mean, I can say that we've worked with all those firms. I believe you can get every quote on ADVFN and LSE, London South East.
Okay.
I think there are from time to time some problems. I'd like to, if people have problems, we want to know about it. It's absolutely essential that we do hear from people if people aren't being able to get what people these companies are saying are being delivered. We will continue to improve. We made an announcement, not directly related to data, but we did a deal with a artificial intelligence machine learning company called Fregnan recently. We want to get data out to people. This is quantitative, not qualitative type research, but there's a lot of transparent data on all our Apex stocks. This is free to the investor to use. If they want to go into further depth, they can go directly to the machine learning company. But there's a lot of information. I think it's the obligation of a stock exchange to make certain that data and that information and that transparency is out there. And I do have this vision that in the future, you should be able to, and I think we're starting to get there, trade any asset class on your smartphone, on a subscription, anywhere around the world. And when I said that 9 years ago, people sort of laughed. And I think when you see the changing in the way of some of these electronic brokers that have started, you look at the adoption of people like Aquis and what's going on here, we're getting there. And there was a time I thought I'm never going to see it in my lifetime. I hope I'm going to live certainly a lot longer now. And I really do believe that sort of thing is going to happen pretty soon.
Yeah. No, there's definitely. You talked about any equities around the world. I mean, I'm in quite a few TSX stocks, and the absolute nightmare that I'm having at the moment to try and get paper certificates or DRS certificates into lodged is just crazy. So I've actually resorted now to open up a broker account in New York so I can get these DRS certificates lodged. So, no, there's huge opportunities for growth with all these markets around the world. And
it's really interesting what you say there, because, when I was brought up 40 odd years ago, when I first did my first white port, or pint of white port, in effect, back in the Jamaican Inn, SMEs and finance for small and small businesses, it was all local. It could only be local because it was only local people who understood the company. They never got any research on a wider basis. So if you wanted to raise money, you basically went to friends, family, bank, or some people locally and entrepreneurs. But of course, the internet has completely changed that. We can all look at data and information on any small company around the world. And I think it's been proven that the greatest alpha, as the greatest outperformance comes from SMEs, value stocks, growth stocks. And, if people can looking for better returns, then the SME market is a fascinating place to be. And we don't have to have just local knowledge. You can get this information at your fingertips. And that's what the World Wide Web, in effect, has done. Now, with it, unfortunately, comes a huge amount of information, and we end up with too much information, a lot of which may be not true. So I think one has to be very, very careful about the research that you do online. But it does mean for investors, instead of having local companies to invest in, you literally have the world.
Yeah, but it's trying to get access to the world. It's you see the way crypto has adapted to sort of KYC, know your customer. It's fantastic what you can do with some of these crypto exchanges. You can literally open an account and you've done your KYC in 10 minutes, and that's you, away you go. Brokers will have to embrace it as well, because some of the paperwork trail that you need to open accounts nowadays is just ridiculous. But I think when some of the UK brokers eventually sort of waking up and realise there's a whole world out there, it's going to be for the benefit.
There's no excuse why it should take you more than 15, 20 minutes to open an account with all the KYC and AML capabilities today, technology driven. And I think your point on crypto is interesting. It's a double-edged sword. People can, and they have adopted and adapted to trading in crypto. Many of the exchange groups there can't manage the capacity for that growth. And I think one of the most important things which needs to be talked about is the technology background. That if you're running exchange grade technology, it is really, really important about the reliability of the technology of the exchange that you're trading on. And we saw this last year come up, even on big exchanges. We saw outages in Euronext, Deutsche Börse, Nasdaq. We saw Australia, Japan, and New Zealand. Major exchanges around the world had outages, and I think there's a lot of discussion about the technology that's used as volumes grow and more people trade. And I think it is important. It's one of the things that we've worked very heavily. You mentioned we have three divisions. We obviously have the exchange original business, which is the trading of large caps, where as I said, we are the largest provider of liquidity. We have the primary market as the Aquis stock exchange, and we've seen phenomenal interest and having changed our rules and done this sort of school approach. But of course, we've got the technology business where we license technology to new exchanges. Some of them are crypto, some of them are insurance, some of them are all different sorts of asset classes. But I think the exchange grade technology is really important. And the move there, which we focus very heavily on, and we've done a proof of concept with the Singapore exchange, with Amazon Web Services, is moving into the cloud. The ability to be able to have greater reliability at cheaper price and be able to get the same form of sort of speed and low latencies. This is the future. This is where an exchange is going to be in the future, and it'll be huge cost savings for exchanges, which ultimately means cost savings for the users.
Yeah, yeah. No, the world. I know it's changed a hell of a lot in the last 20 years, but it just seems to be every 6 months there's a huge leap in technology, and I'm trying to remember the term. It's to do with a computer processor. I can't remember the name of the term. That if you go back,
this is where, of course, now I'm post 60, my sort of senile dementia starts, and I can't remember, but I know exactly what it is. That you get double the memory, double the capacity at half the cost every X number of years, and I've forgotten who the person is behind that. But it's true, and I think people who think that's not going to take place any further because we've reached the end. It's rather like saying 88 keys on a piano, we've therefore written all the music. The answer is, of course, we haven't. And it's the same, I think, with the development of technology here. We've not, it's going to continue. There's a lot of talk about quantum computing, and I actually think in quantum computing, it's not a question of if, it is a matter of when. And that is an absolute game changer, and a game changer for our industry, but a game changer for the world.
Yep. Yeah. Mark, sorry, I've been talking a lot. I'll let you jump in.
No, I think we're coming up on a good amount of time there. I really like what you're saying, Alasdair. I liked your enthusiasm when we did the special feature with you 2 or 3 months ago, and the enthusiasm's still there. And I'm glad to see you've come from your sort of failing's the wrong word, but the past experience, and you've got your house back in France, which is nice to see. And yeah, fifth time. And yeah, your enthusiasm is very clear, and I like what you're saying about being able to invest in the world, SMEs, get the public back on the public markets. And I guess really this is going to come from broker adoption. Is that right? Is that the access really is going to be brokers adopting this globally?
I think there's a bit of that, but there's also, a number of the companies are coming now directly to us, and we're actually, brokers who were sort of looking down and going, Aquis, it's just NEX or ISDX all over again. We're actually, those people who have said that to us obviously don't get referred when we have companies coming directly to us, but probably the majority today are companies that we're now looking for advisors for, and obviously giving those companies back to advisors that are very supportive of Aquis and see the future. So it is a classic sort of Darwinian situation where I think the progress will be made and the survival of the fittest. And I remain very confident that we're part of the future.
And what about the public then, or the retail investor? What's their access point? Is that through brokers? They can't sort of trade.
Absolutely.
Yeah.
Absolutely. And through people who are listening to podcasts like this, and we need to get the word out there a lot more than we're doing today. I always say, funny enough, I said it to our board this week that when we started this business, we had like 100 clients to approach. Therefore, you had 100 people you need to know. When you start getting into the technology business, you sort of need to know maybe a few thousand people. And then you start going to the primary markets business, you need to know all the lawyers, the accountants, the brokers, etc. But actually, if we want to bring the public back into the public markets, we now need to broadcast to millions of people. That's a very different approach to when we started the business. And that's what we need to do. We need to get out to millions of people to support and realize that Aquis is the new NASDAQ of Europe, and that we can really help change the economy. It's not just changing Aquis, it's bringing money to SMEs at a critically important time for the United Kingdom.
Great. Well, I think that's a good way to finish, the new NASDAQ of Europe. I think that's a very good point to end. And hopefully, this people listening to this podcast will get a much better understanding of Aquis. But unless, Kenny, you've got any final points or thoughts for Alasdair, I think we're pretty good.
No, I'm all good. I'm going to actually go and research white port because it's something I've never heard of before. So that's one of my takeaways from today, is to go and look at white port.
All right, well, enjoy it. I won't be joining you on that one, but it's been great fun. I've thoroughly enjoyed being here. Thanks very much, and I hope your listeners enjoyed it too.
Thank you very much, Alasdair.
That's great.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell. Tune in next time.